In these tough economic times, Americans are looking for safe haven assets to help protect their financial well-being. While many Americans have become 401k millionaires in recent years, they want to hold on to that wealth rather than watch it evaporate during a possible stock market crash. But how do you potentially protect that wealth? Hi, I'm MJ, and in today's video, you're about to find out. One potential option is to buy tangible physical assets. Among the most popular of those is gold, which has a long-standing history as a store of value and safe haven asset. But some people are wondering, what about other tangible physical assets? What about precious gems like diamonds? Couldn't they also be a safe haven asset? Today, we're going to give you a full comparison of the two. Let's start with the advantages of physical gold. There are numerous advantages to owning gold, but here are some of the 6 most important ones, particularly as they relate to gold versus diamonds. 1. Safe haven asset. Gold has been trusted as a safe haven asset for centuries. It has a reputation for performing well even when the economy is not, which is why the demand for gold tends to rise during periods of recession or anticipated economic and financial turmoil. During the same period that markets lost over 50% of their value during the 2008 financial crisis, from October 2007 to March 2009, gold gained over 25%, and gold continued to gain even as markets struggled to regain their footing, finally setting all-time highs in 2011. 2. Inflation hedge. Gold also has a reputation as a hedge against inflation because it maintains its purchasing power over time. While the US dollar has lost 87% of its value since 1971, gold has gained over 6,000%. During the stagflation of the 1970s, gold's average annualized growth rate was over 30% per year over the course of the decade, well higher than inflation and well higher than stock markets that largely floundered. If inflation becomes entrenched today, and if we see a return to 1970s-style stagflation, many gold owners expect gold to perform similarly today as it did in the 1970s. 3. Liquidity. Gold is in demand around the world, traded on exchanges just about 24/7. From India and China to New York and Chicago, gold is one of the most traded commodities on the market. If you're looking to buy or sell gold, you'll be able to find it. And with both gold coins and gold bars being universally recognizable, there is a vast market out there for gold investors. 4. Portability. Gold is also an incredibly portable and compact store of wealth. All the gold ever mined in the history of the world can fit onto a soccer field to a depth of 1 meter. A roll of 21-ounce gold coins can fit in your pocket, but is worth enough to buy a nice car. A few of those rolls could buy a small house. And because gold markets are so widespread, selling that gold is relatively easy due to how liquid a gold asset is. 5. Price transparency. Gold is also very easy to value. Most investment gold products are marked with their weight and purity, so you can easily determine what their metal content is. While market values of gold coins and bars often carry a premium over the melt value of the gold in them, anyone can assess the melt value by determining how much gold is in the coin or bar and multiplying that by the price of gold that is quoted all over financial media. 6. IRA eligible. Gold is also in certain forms eligible for IRA investments. IRAs are generally forbidden from acquiring metals and gems, with the exception of certain U.S. mint gold and silver coins, as well as any gold, silver, platinum, or palladium coins or bullion meeting the minimum fineness requirements for future contracts. In the case of gold, this means that any gold coin or gold bar that is at least 0.995 fine, 99.5% gold, is eligible for acquisition by an IRA. Now, what about diamonds, you ask? It'd be nice to be able to talk about the many advantages of diamonds, but when it comes to diamonds, aside from the fact that they're nice and shiny, there aren't a whole lot of advantages to owning them. But hey, we'll give it our best shot. The only real advantage of diamonds that I could find is their perceived scarcity. While it's outside the scope of this article, the scarcity of diamonds is largely the result of their being controlled by the De Beers monopoly for over a century. As the cartel breaks down and as lab-grown diamonds become more prevalent in the market, the scarcity of diamonds will likely decrease, as will their price. So compared to the 6 impressive advantages to owning gold, I'm guessing you can see where this video is headed when it comes to a winner. Now let's talk about the disadvantages of owning diamonds. Hint, there's more than a few. 1, low resale value. Among the most important disadvantages of diamonds is their low resale value. Yes, you may pay thousands of dollars for a diamond engagement ring, but you're not going to be able to sell that ring for as much as you paid for it. And who do you sell them to? There isn't a vibrant and liquid market for diamonds and diamond jewelry like there is for gold, and you'll most likely have to sell your diamonds back to a jeweler. Because of the De Beers monopoly and the way diamonds are distributed, you can expect to get a fraction of the price you paid when you try to resell diamond jewelry. Buying diamonds and expecting them to appreciate in value so that you can sell them later on very likely is not going to work out the way you expect it to. 2, blood diamonds. You've all seen the movie, right? I'll tell you what, Leo should have won an Oscar for sure, don't you think? Well, there's also the fact that blood diamonds exist and diamonds are sourced from conflict zones. At one point, the De Beers monopoly tried to buy up as many diamonds from other producers as it could in order to control supply. But since blood diamonds now are viewed negatively in the marketplace, most diamond sellers attempt to trace the source of their diamonds to ensure that blood diamonds are not in their supply chain. Still, you can't always guarantee that the diamonds you buy are 100% conflict-free. 3, lack of investment options. If you want to invest in diamonds, the obvious question is, how? With gold, you can buy gold coins or gold bars. If you don't want to buy physical gold, you can buy gold exchange-traded funds or shares in gold mining companies. But how can you invest in diamonds? You could buy unpolished diamonds, but who would you sell them to? Once diamonds leave the primary supply chain, many jewelers are not going to be interested in buying them anymore. You could buy diamond jewelry, but jewelry purchases are often driven by a personal attraction. A ring or a necklace that might be appealing to one person is not going to necessarily appeal to everyone. Diamonds are also not IRA-eligible investments, as IRA accounts are prohibited from acquiring gems. Whereas with a gold IRA, you can make a tax-free rollover of existing 401k assets into a gold IRA, and you can't do that with diamonds. And when was the last time you were able to hold diamonds in a brokerage account? Unlike gold ETFs, there's no equivalent type of ETF for diamonds. The long and short of it is, while you may be able to get your hands on diamonds, it's going to be difficult to find diamonds that other people are going to want when it comes time for you to sell them. 4, grading difficulty. One of the problems is that diamonds vary significantly in quality. Diamonds are judged by the 4 C's: cut, color, clarity, and carats. The shape in which a diamond is cut can determine how desirable it is. Color is important as well, as colored diamonds aren't often in high demand. Clarity of a diamond can be difficult to judge if you're not a gem expert, and carats, well, once a diamond's cut, it won't grow any larger. The jewelry industry has a reputation for being very insular, and most people who don't deal with jewels on a regular basis don't really know how valuable the jewels they have really are. They have to rely on experts to tell them. 5. It's easy to get scammed. That reliance on experts can get you into trouble with diamonds and other precious gems. How many times have you heard stories of a woman taking her diamond ring in to get worked on, only to receive it back with stones that seem inferior? Of course, in those cases, it's the word of a layman versus the word of an expert, so there's little remedy. But it points out that in a market in which experts, jewelers, have so much more experience, knowledge, and expertise than the buyers, it's very easy for the buyers to get scammed. More likely than swapping stones would be a buyer buying a stone that comes highly touted, only to find out years later from another jeweler that the quality was just highly overrated. While the gold market has its fair share of scams as well, there are steps that even an inexperienced gold buyer can take to make sure that you don't fall victim to a gold scam. I know it seems like we're just piling on diamonds here, so let's take a look at some disadvantages of gold as well. We found a few, but it wasn't easy. 1. Counterfeiting. With the high price of gold, it's a very tempting target for counterfeiters selling fake gold coins and gold bars. And with every potential gold buyer looking for a good deal, it can be too easy to get fooled by a deal that seems too good to be true. If you've never purchased gold coins or gold bars before, how do you know that the gold you're buying is authentic? There are easy ways to check, such as measuring and weighing, so you can help eliminate obvious fakes. But one of the easiest ways to avoid counterfeit gold is to work with trusted gold sellers. Goldco works with mints around the world to source our gold coins directly from the mints that produce them, ensuring that the gold coins you buy from us are 100% authentic. 2. Storage and security. Gold is valuable enough that you're going to need to think about storage and security. With a gold IRA, that's already taken care of, as the gold in your gold IRA must be managed by a gold IRA custodian and stored at a bullion depository. Still, that imposes an extra cost, normally a couple $100 a year, which can eat into your gains. And if you choose to buy gold coins directly and store them yourself, well, what do? You could store them at home in a safe or a safety deposit box, or if your purchase is large enough, choose a bullion depository to leave it in. In any of those cases, however, you're going to pay for the storage, and the more you pay, the more secure your gold will generally be. 3. Some investments are less than ideal. Not all forms of gold are the same. Owning physical gold coins and gold bars remains a popular method for many gold investors, but there are alternatives such as gold exchange-traded funds, ETFs, and owning shares and mining stocks. The drawbacks to owning gold ETFs is that you don't actually own gold, just shares in a fund that claims to own gold. You can't convert those shares into physical gold, and given the sometimes opaque nature of the ETF's custodial gold arrangements, you don't actually know if the ETF owns the gold that it says it does. Gold mining stocks are not a surefire bet if the gold price is going up because there are numerous other issues that play into stock valuations. Even if gold mining revenue increases, higher energy costs, transport costs, political unrest, labor strikes, or environmental cleanups could impose costs on gold miners and depress the price of their stocks. When times get tough, it's natural for people to want to reach for the safety and security offered by tangible physical investments. But while both gold and diamonds are tangible physical assets, their utility differs immensely. When it comes to gold versus diamonds, choosing one over the other would be dependent on your own financial goals and financial needs. But if you choose to buy gold, make sure you educate yourself first with the top-rated company Goldco. With over $2.5 billion in precious metals placements and over 6,000 five-star reviews from their satisfied customers, they have worked hard to become one of the best and most trusted gold companies in the country. Whether you choose to roll over 401k assets into a gold IRA or choose to buy gold coins to store them at home, Goldco has gold products that can suit every need. If you're looking to protect your hard-earned wealth with gold, give Goldco a call today. Their phone number is in the description below. Also, you can get a copy of Goldco's Wealth Protection Kit to learn more about diversifying and protecting your savings with gold or silver. It's free, jam-packed with critical information, and is a no-brainer for anyone looking to diversify and protect their savings. That link is also in the description below. Well, that's it for today. I'm MJ, and I'll see you next time.